Good afternoon, everyone, and welcome to Stock Market Today for Tuesday, May 13th. It's Alissa Coram here, and stocks extending their gains in today's trade as we're seeing optimism on the tariff front and artificial intelligence as well. And some key news is that the S&P 500 and the NASDAQ 100 both positive on the year now. And joining me to discuss more of today's market action is my colleague, Ed Carson. Can you believe it, Ed? We're now positive on the year. What a roller coaster.
Yeah, I can't believe it. It has been a roller coaster. I want to take a look at Nvidia and Palantir, two big winners today, as well as Loar Holdings.
Okay, we'll take a look at those stocks, but first let's take a closer look at the action in the major indexes today. The Nasdaq Composite up 1.6% on the day. Meanwhile, the S&P 500 up 0.7%. The Dow, of course, UNH 0DJIA, dragging a bit here with UNH. And the Dow was down 0.6% on the day. Meanwhile, the Russell up about 0.6%. So tech in the driver's seat here, continuing to accelerate after we punched through that 200-day line on Monday, Ed.
Yeah, the market looks great. I mean, it's a powering higher. It's had hardly any resistance. It's like it pauses for a few days and before the 200-day line, then got the good news and reacted very well to that news. I mean, let's face it, here's two big things that the market sold off in late February for two reasons: the Trump tariffs and AI spending fears. Well, the tariffs are much lighter than had been there a few weeks ago. AI optimism has picked up. Today there was an Nvidia Saudi deal. And there's other reports of other deals in the Mideast, and that's been continuing on. There's other things going on. So again, the two big headwinds are now tailwinds. And so maybe it's not a surprise that we're seeing the market sort of erase the losses they've had over the past 2 months.
Absolutely. So, in terms of the next levels to watch here, we did have that deep seek gap down day. Speaking of concerns over AI, we're getting close to those levels, Ed. But you're right, we're just accelerating here to the upside. It's not like we just barely got over the 200-day line. We're well above the 200-day line, and we do now have the 50-day line in an uptrend. It looks like the 50-day. A little bit higher than what we had in Monday's session. So we're seeing the moving averages start to curl a little bit higher. I know the 200-day line as well, something that you pointed out previously, now in an uptrend. So we're getting close to what would qualify this market as a power trend. There's one more time element that we need. So I think Friday is the soonest that we would officially be in power trend mode, Ed.
Yeah, and this is why, look, we're getting higher. A lot of stocks, and some of the stocks we'll look at, that are starting to get extended or feel a little extended. This is why I talk about you want to take advantage. You want to be aggressive, not reckless, by gradually getting in. Again, you get in and with the follow-through day back on April 23rd or whatever, and 10% or whatever a day, and you could be fully invested here. Not necessarily you should be, but it doesn't take too long. And there have been buying opportunities, so you want to take advantage of that. And things are going very well right now. This is, you just have to, you can't wait till the market's at all-time highs before moving, and a lot of things are moving.
Yeah, incremental decisions. Totally agree with you, Ed. Now let's take a look at the S&P 500. Not quite as powerful, but definitely accelerating to the upside this week. It's been a very powerful start to the week.
Yeah, and this gain was even with the United Health and the health insurers weighing on the S&P. Obviously, we'll look at the Dow, but the S&P, they got some knocks by the health insurers as well. But yes, really strong move, getting to positive territory. Yes, tech is leading, yes, or that, but there's actually a lot of breadth going on. And so a lot of positive things about this market.
Yeah, RSP lagging on the day, but above the 200-day line as well, and the highs from March. So notable progress, also clearing a trend line this week. That's the equal weighted S&P 500 ETF. Okay, so you mentioned the Dow. Tell us a little bit more about that UNH news.
Yeah, United Health, for the second time in a month, warned on costs, and its CEO is stepping down for personal reasons. That's what the company said. So that one just took an enormous drop, I think something like 18%, and it's a price-weighted index. So even though United Health is not nearly as big as Nvidia, yeah, I think it's had, it's a bigger, maybe a bigger weight than Nvidia because of the price weight. So that's just something with a price weighted index.
Yeah.
And it's a huge drop anyway, even if it weren't. I mean, it's still big. So that's weighing on things. This is why we don't always look at the Dow. I mean, honestly, it didn't do that badly given this enormous drop. Yeah, it's below the 200-day line, but this is the exception that proves the rule. I mean, yes, there's always going to be
Mhm.
some losers, but I'd say generally, and yeah, the Dow isn't leading. Generally, I think this was a very positive day, despite the fact that technically it was a mixed session.
Yeah, totally agree. I mean, the Dow, it's 30 stocks, right?
Yeah.
Taking a look at something a little bit more broad based is what we really base our decisions off of. The Nasdaq, the S&P 500 in terms of portfolio management. There. Let's also take a quick look at the 10-year Treasury yield, Ed, of a continued sign that investors are going out of bonds and into stocks.
Yeah, this isn't like when back in March when things were going really wild, and that was not pleasant. That's not what should happen when the stock market is selling off. So this is normal, but this is the highest close in a couple months. So that is something. Again, the stock market's at the highest in 2 months, so it's not completely shocking, but it is something that could
Mhm.
weigh on stocks. It's something to be aware of. I'm not saying anything. It's just that the market can rally on rising yields until it doesn't. So, but it's just something to just
Yes.
something to watch for. That could just be something that slows down. I mean, the market could easily pause. I mean, it would be nothing wrong with the market pausing after the huge gains we've had. That would be normal. It doesn't have to, but so that would be fine. And again, it could maybe help, it could be constructive for a lot of stocks that are getting extended. Uh, but so we'll see. So again, a pause would not be the worst thing in the world at this point.
Yeah. Okay. Well, we'll definitely keep our eye peeled for those developments in the bond market. Okay. In terms of sector action, you mentioned that a big Nvidia deal and the chip sector definitely took off today, up 3.4%. So starting to get its mojo back, maybe.
Yeah, it hasn't recouped its deep state losses, but it's definitely getting above there. It's sort of trying to fill in the gap now. We're getting close
Mhm.
to. So I think it's starting to fill in the gap.
Yeah.
So that's a positive, and you can see that this was lagging. Sort of software is something that we also looked at, but that was already moving. So it was like, oh, okay, the chips are sort of lagging. IGV is still looking very strong, and Palantir is a big part of that. But so we're seeing the tech moving. We're seeing a lot of like more tech, and the mega caps are coming up, and some of the mega caps are actually looking good.
Yeah.
Not just hey, they're not just rebounding way off the lows. They're starting to look positive. So a lot of things in tech are looking really strong.
Yeah, and I mean, that's what you want in a bull market is you want more stocks joining the party, right? You don't
Absolutely.
want just a narrow crop of stocks to choose from. So, speaking of Nvidia, a notable gain today at 5.7% here, Ed, getting back above the 200-day line. That's notable. You talked about that deep seek gap down for the sector. So, same can be seen here with Nvidia. It's now trying to get back above the trading levels that it was at in that January downdraft here. So continued progress for Nvidia, arguably an early entry this week, especially now that it is above the 200-day line. This is not a leader right now as we would typically classify it, but some notable progress here and probably some interested buyers out there.
Yeah, I mean, I think it certainly could have done that or done a starter position. It's not something you had to do, but I like the volume was higher today for the first time in a while. So some of the rally, and we've seen that with some other stocks, where some of the rallies were coming up on lighter volume. It was nice to see this higher volume today. Uh, maybe again, there's just this fundamental issue: is AI spending going to really dry up? And it just doesn't seem like that's happening. That doesn't mean it won't happen. It doesn't mean the vibes can change. What matters is that the market vibes were really bad for 2 months, and now they're positive. Uh, and yes, some of the earnings estimates have come down, but it's still huge growth in the and it's really when the valuations aren't that high compared to a lot of other names, and so it's still
Mhm.
growing strong. So we'll have to see it. I know we don't normally talk about it, but this is really strong growth when you compare it to the other mega caps. Especially that's where the valuation at one point a few quarters ago was over 100, but it's like wait for this to catch up. It'll look pretty strong. So again, this is, even if you say I'm not going to turn around, this is hugely important for the market to see
Mhm.
this one coming back.
Absolutely. Very notable there indeed. In terms of what, for my trading style, what I would like to see from it is a new base now at this point. Can it really build a platform now that it's gotten above that 200-day line? I think 140 is a
Hmm.
key level. And then 150, that's going to be a challenging area for the stock to get above. And we've got earnings in two
Yes,
weeks.
that's another thing, because the last couple of earnings reports, there have been some of these earnings reports, there's been times when it sort of pokes out really strong and then really sells off. And so
Mhm.
I think these earnings reports are really, you really want to be seeing how that goes, and the expectation. Sure, you won't expect that they'll beat numbers, they'll have that. What is their expectation for revenue? Now the vibes are better. It's
Mhm.
like, are they going to live up to what are now reviving expectations as well?
Right. And I wonder if it may follow in the footsteps of, your Meta and your Microsoft in terms of, sort of an unconventional type entry or move above those longer term moving averages, but then paused a little bit and then continued higher there. Microsoft also a couple of weeks ago gapped up on earnings, paused a little bit, but is continuing higher here. So we'll have to see how Nvidia acts when its earnings report comes up in 2 weeks. So we still have 2 weeks of trade to to see if there is some sort of pause or digestion before it reports. So very interested to see what happens there. Okay, moving on to Palantir, which you mentioned, software leadership. Full disclosure, I do own a position here. We got a full fledged breakout today, Ed. Shares up 9%, cup with handle breakout. Arguably, the 100 area a couple of weeks ago was in terms of managing risk around your 50-day moving average was the time to get in. Also, we had a recent pullback to the 21-day line. So there have been opportunities before today to get involved with this stock.
Yeah, and so this was a breakout. It was nice to see a pause, but uh, but it will say it is pretty extended from the 50-day line. Now that's something I pay attention to. You don't have to. If you don't do it, you might make use today's low, I think, or would be something you would definitely want to do, or to be used as an exit strategy. But it's just in a situation. Doesn't mean we're seeing this with a lot of breakouts. Now again, because the market has been running up and up and up, there's no way for the 50-day line to catch up with anything. So that's one reason why it wouldn't be so bad if the market did pause for a little bit. So this shows a lot of strength, and this is showing a lot of strength, and maybe it continues to show that strength. It's just that there is the higher, more elevated risk that you could see a bigger drop. And where would the next support level be? If it falls to the 21-day line, well, that could be what, a 20% drop at this point. So that, you wouldn't want to wait for that long. So it's just something, or 17% or so. So it's just keep that in mind. And that's not just Palantir. There's a lot of names that were clearing traditional
Mhm.
buy points. These bases were 30, 40%, 50% deep, and they've run up to hit new highs. It's not a
Right.
surprise to see them extended from the 50-day line.
Mhm. Which, to your point towards the beginning of the show, if you start adding exposure around a follow through day, this stock was actionable the day after we got that initial follow through day signal. So, in terms of where it was versus the 50-day at that point, about 10%. So, that could have been a level to start dipping your toe in the water, and then maybe you're incrementally adding, like I was on the bounce off of the 21-day line, and then a little bit more as it was crossing the recent highs today before it got stretched at this breakout area. So
That's
just
a
something to think
great,
about
great
there.
way to trade that.
Well, we'll see. Uh, you never know. Okay, let's also take a look at LOAR. What a tricky stock this has been at, especially with the earnings report today. It looks like, on the face of it, some pretty solid growth here, but the volatility this morning was pretty extreme.
Yeah, and it
What do you
wasn't
think?
just for 1 minute; it was for like over 30 minutes, an hour, and it didn't end. I mean, it still was a pretty big loss at the end of the day. I think the outlook was a little bit weak in this way, especially when given that there was a Q1 beat. When you sort of factor that in, the real issue, this is why earnings season can be tough. Okay, one reason is that, look, it closed in the buy zone, so people who bought in the breakout, if they held it, yeah, they may still be up on it, but you don't know that. That's one that makes it so hard. Even if earnings are a 50-50 proposition, it can still be worse than that for you, because you can get shaken out at the lows. Or on the flip side, what if this jumps up 10% and then closes down, which happens, those
Yes.
things happen. So you can buy and then you get shaken out. So that's just why holding into earnings or buying right at the open, it can be tricky, even if in hindsight it goes, oh yeah, that was obvious. It's like, well, no, at 6:45, 7 o'clock this morning, it did not look obvious that this would even close in the buy range. And we don't know how things will shake out from here. It just remember, just like, earnings are just so treacherous, and it's not just the close, it's that intraday movement as well.
Right. Because you're right. In hindsight, hey, if you would have done nothing, but we're active traders here.
Yeah.
So, risk management in real time, at least selling some in the
Yeah.
early going when you're down. I mean, how much
He
was
was
the
down over
decline intraday?
10%. He
It's
was
down
down over
over. Yeah. So
yeah.
that's really hard to stomach and honestly justify if you are using risk management
Yeah.
rules. So very tricky indeed. And that's why we also like to talk a lot about having a cushion heading into earnings when possible. So that way you have some cushion to work with. So even if a stock goes down 10%, if you are heading into that report with a 10% profit cushion, maybe you can be a little bit more patient and see if it can recover off lows intraday, something like that.
Yeah, absolutely.
Okay, Ed. Well, the fun continues, doesn't it, in this market?
Yes, it does. It is a little more fun now.
Right. Yes. Like I like the vibes. You've mentioned the vibes. The vibes have changed a little bit over the last couple of weeks, and especially starting with Monday's action ramping above that key 200-day line that we've been so focused on. All right. Well, thank you so much, Ed. We appreciate your insights today.
Thank you so much.
And thanks everyone for tuning in. Just a reminder that it is the second Tuesday of the month. So we have our Swing Trader status update show live at 5 p.m. Eastern on YouTube. So definitely make sure to check that out for our Swing Trader team's take on the current market action, how they're handling exposure, locking in profits into strength, and what they're looking at some example trades that they've been involved with. So that's always a good time learning from Mike Webster and Justin Nielsen. So check that out live at 5 p.m. Eastern today. And we will see you back here tomorrow after the close.